Welcome back to the Watch List. Time to take a look at the markets, the U.S. economy, Mag 7, and some retirement planning strategies. Ted Thatcher, president of Bright Lake Wealth Management, is with us. So when you're planning the portfolio, you first have to look at some of the fundamentals, right? How are you feeling about the state of the U.S. economy?
You know, Nicole, when we think about the U.S. economy, at the end of the day, it comes down to the consumer, right? And of course, right now, everyone wants to talk about the Fed and rate cuts and how likely that is to happen. But I think it's impossible to have a conversation about even that dual mandate that the Fed has without also really looking under the hood at how that affects the consumer at the end of the day. You know, we've seen the effects of inflation over the last several years really put the consumer in a hard place. We are now seeing all, of course, that jobs data come out, which is also generally bad news for the consumer, to say nothing of, you know, the housing issues that the consumer has faced. And so Jerome Powell is now stuck in this rock and a hard place, I think, sort of trying to pick between the lesser of two evils here. We saw his comments today, of course, increasing the probability of a rate cut in September. But the question I have at this point, when we think about certainly a portfolio and the consumer and the economy as a whole, is whether or not that's actually going to be enough.
And so at this point now, how do you fight inflation in the portfolio? What goes in there?
Well, you know, whenever they were increasing rates, that phrase that comes to all of our minds is, hey, don't fight the Fed. Figure out what they're going to do and get out of their way. And so, of course, we've already seen, you know, the top end of the markets, the indices start rising. I think that you have to say, okay, where are those large tech stocks, those Mag 7, companies? They have performed incredibly well over the last, the first half of this year because of everything around AI, which we can talk about. But of course, with as large as they are, you also see those tech companies see a boost when you start to think about monetary policy and Fed rate cuts coming. So you get the benefit of the AI industry, you get the benefit of monetary policy, and we haven't talked about it a whole lot. But it's a good reminder that the balance sheets of these companies also go a long way in a scenario like this.
By the way, you also always keep in mind Roth conversions. I mean, we think about tax purposes. Where does that fit in for somebody?
Yeah, so I think if we just zoom out a little bit, one opportunity that I'm really taking a harder look at here in the second half of the year is this sort of rock and a hard place situation that Jerome Powell has found himself in with the consumer. Because the two sort of scenarios I see is he's saying, okay, well, if we take a little bit of a cut here, you know, likely coming up in September with all the probabilities showing us now, we say, okay, well, what does that mean? Well, it's, you know, an attempt to try to soften the jobs market or strengthen the jobs market slightly. Hopefully it gives consumers a little bit more access to the housing market and provides a little bit of relief. And hopefully those things are good enough where the consumer might be willing to suffer a little bit more inflation as opposed to the alternative where inflation is more stable, but they're in a harder place when it comes to the jobs market or, the housing market and those types of things. And so I do think that, again, I'd pose that question of, is it going to be enough? The September decision is one thing, but really what's going to point in terms of the direction for the rest of the year is what they do between September and the end of the year. And where a Roth conversion becomes valuable is if there is some data that sort of breaks the back of the markets a little bit and we see a little bit of a pullback. If that happens, that is a prime opportunity to take some of those appreciated equities while they're down, pay the tax on them now, and get them into, a tax-free vehicle like a Roth IRA.
Yeah, you said one of the best opportunities in your adult life is actually to really potentially reduce taxes, and this is one way to do it. As far as those Mag 7 names, and you think of them, I don't know, maybe sometimes their value and sometimes their growth, depending on the time period. But are they good long-term plays, do you think, for a portfolio?
I do. I mean, at the end of the day, we hear this phrase, let your winners ride. So obviously with the run-up that they've had because of AI, I think there's a little bit of a conversation about how overextended they might be. And I would say that that's not unreasonable. But as we've seen in the past, it's really hard to time these companies perfectly. And so if you have these in your portfolio, maybe you're a little bit concerned that they're a little overbought, but they have really driven a tremendous amount of performance in a portfolio. And so it seems like right now, every time a company announces, more investment in AI infrastructure, the market seems to give them almost an immediate multiple on that investment. Take Microsoft, for example. For every, $1 billion they're putting into AI infrastructure, it's like they're almost getting a 2 or 3 times, multiple on that in terms of their market cap. The load up that these Mag 7 companies have been putting into infrastructure is extraordinary. And so if we're believers that, the AI is the future and that infrastructure is going to pay off, I really do believe it's for the long run.
And I'll add that Alphabet Google on that deal with Meta today actually has now hit an intraday high. And Google, this name was actually one that people said was underperforming. It was lagging, had some growth potential in the Mag 7. It was the one that sort of ran last. And at this point now is hitting a new high today as we speak. A final quick thought, please.
No, I definitely agree on Google. I think that people have been so concerned about whether the AI boom is going to affect their Blue Link search business, and it's had this almost cloud over it. But I think if we've really looked under the hood at Google, we know that they're a player in this space. And it doesn't surprise me at all on the back of this news to see them start to get some of the credit I think they deserve.
All right, Ted Thatcher, President of Bright Lake Wealth Management. Ted, thank you.